Hey, good morning, you beautiful human beings. Guys, we are set for a pretty crazy week. I've been here for around about 2 hours just looking at the markets, looking at what is coming up this week. And I've just realized that we are in for a massive ride this week, right? There's very few times we have such a clashing of different things coming together. We've got the Fed interest rate that's happening on Wednesday. We've got earnings reports of some of the biggest companies in the world currently happening. And all of these are tying into a very perfect storm for a massive bull run across the board. So I'm going to dive into a little bit. I'm going to show you guys what's happening. I'm going to show you guys some analysis, what I am most excited about, and we're going to sit back and relax. So just a massive shout out. I see Garwin in the house, Baynard, Nashil, and Petunia in the house with us this morning. Welcome, you amazing human beings. All right, so let's jump into it. Let's have a look at what's happening. But most importantly, I just want to let everybody know I did not update the calendar yesterday. I do apologize. For Premium Plus, for some of the other groups. So I have updated it, right? So for Premium Plus, I've put in the Fed interest rates that we're going to be doing live tomorrow evening. That's going to start at 8:30. So we're going to have a trade-a-thon. We're going to have about half an hour together going through some teachings, preparing for the interest rates announcement. That's going to happen at 9 p.m. on the dot. Then 9:30, we have a live press conference with Powell, right? So it gives us a great amount of time. Usually the press conference can be anywhere from half an hour to an hour itself. So it gives us about 2 hours together. We're going to break down the markets. We're going to have some teachings. We're going to do some really amazing things. But because those shows are so intense, I generally try and take some time off from the other shows just to get some rest in, just to get some normal things going. To wake up at 4 and finish at 11 in the markets is obviously quite intense. So I've updated the calendar there. I'll also be updating with NFP for Friday, just so you are well aware. So if you're part of Premium Plus, you can click on that. If you're not part of Premium Plus, you can still click on that, but it'll take you to Premium Plus. And you can obviously sign up there to get into that meeting or that announcement. Okay, super. So what's happening in the world? You're going to see a bunch of stories. You're going to see a bunch of articles across the board. The most important thing I want to draw your attention to, and I'll put this in our community area, is that when it comes to some of the earnings that is coming this week, we got some massive numbers that are coming out. Most importantly for today, right, when we look at the earnings that are going to be coming out today, we've got AMD, right, we've got Alphabet, which is otherwise known as Google. But EA, Electronic Arts, we've got General Motors, a couple others to mention, but most importantly, Microsoft is also part of that, as well as Pfizer from a pharmaceuticals perspective. So just today alone, we have got a massive amount of data that's going to be coming through. Most of these earnings, right, are going to be happening after market close today, right? And so that means if we have a look at a company like AMD, sorry, or we have a look at a company like Alphabet, which is Google, right? Their earnings call is due for this evening, right? If you have a look at just behind my head here, that's going to be at 23:30 this evening. So 11:30 this evening, we're going to get that earnings call from Alphabet, right? Which means along with all the other companies that are reporting after market close, it's going to be big. It's going to be massive. Now, I'll still decide, whether we're going to be covering it. I need to have a look at how today goes. There are quite a few meetings happening today. I may announce that we may actually end up covering this one, right? So how this works, it comes out in two phases, right? For everybody that is unaware, you get the earnings report that comes out for Q4. So a lot of these companies are reporting Q4, and I'll show you guys a little bit of data in a second, what the expectation is. And the expectation is massive. Let me actually show you that first, just so you can get excited about what this all means, right? So in terms of, some of the biggest companies in the world, right? Apple, Google, Microsoft, Amazon, Meta, and Nvidia, right? They're expected to grow 53.7% in the fourth quarter, meaning they're expected to announce growth of 53.7% in the last quarter, with the other 494 companies within the S&P 500 looking at a potential 10.5% decline. So when they refer to the Magnificent Seven, this is what they're referring to. Obviously, we also have Tesla, which is part of that. That was a little bit of an underwhelming result, right? So of those companies, right, 5 of them are reporting this week. So just listen to what I'm saying here, right? So of the Magnificent Seven, of the companies that are expected by economists to drive the S&P 53, or at least grow in their own market cap, 53.7% for the fourth quarter, which is what we are getting the data on, right? 5 of those companies are reporting this week, right? So just to give you an idea of how important that is, right? What happens is after market close, and a lot of these big, large cap markets report their data after market close. So what happens is, right, as the markets close up or the NYSE Open, NYSE New York Stock Exchange closes, we get their data, right? They report their, Q10 filings for quarter 4, right? And what we end up seeing, there's a bunch of data. Most importantly is the earnings per share to investors. That's a very important one. About how much dividends do investors get back? That's the first thing. But then also the forward guidance is the most important part, right? So we get some data in there. You may see from the earnings or from the reports, some spending, some R&D, research, etc. Revenue is obviously pretty important. How much revenue do they expect to make in that quarter? How much did they report to make? And how much did they expect? That's obviously got a big bearing. However, the biggest, I would say, bearing on some of these markets, what we've seen in recent times is that the markets are pricing in whether these companies are going to do well or not. We can see that if you have a look at the US 30 right now, you can see that massive spike. That's all optimistic sort of movements that are happening, future pricing in. The most important part is the earnings call, where the investors and the board sit down and say, okay, this is what's happened. This is the forward guidance. This is what we think is going to be happening in the economy, in our business, etc. And that's what drives these stocks. That's what really creates a ton of volatility, just so you guys understand that. Depending how today goes, depending how my meetings go, I may host that Alphabet earnings call this evening. If you'd like to see that, you'd like to be a part of that, put a thumbs up in the chat. Let me know if that's something you would like to do with us. We've done a ton in the past. It's great fun, but obviously it's quite draining to host these events, listen through, etc. For both you and I. So let me know if that's something you'd like to see. We may consider doing a live earnings call and trade that stock live this evening. So that's something we are definitely looking at. So obviously a very, very busy week from an earnings perspective, but there's just a ton busy going on, right? So today's going to probably be the biggest from an earnings perspective. We will have some other names that will be reporting after market hours. If we have a look at Thursday, we've got Apple and Amazon also putting in some of their data. That's going to be on Thursday. So that'll move markets quite substantially on Thursday, and we obviously pay quite a lot of attention to that. Now, moving on to today's economic calendar, right? The only big item that is going to be in the calendar for today is going to be that CV consumer confidence. We've got some housing data, but I think the markets in most of this case are going to be looking at how confident are consumers in the US market, right? So that'll drive the price of the dollar. If it comes out positive, it will drive a positive dollar. If it comes out negative, a negative dollar. Now, there is something bigger that is looming, right? So we've obviously got the case where we've got, these Magnificent Seven. 5 of those Magnificent Seven are reporting this week. A large chunk of them are reporting today, right? The expectation is that they're going to report some really, really big and strong earnings for Q4. That's what the economists say, right? And we know that half these oaks are a bunch of bull-ends. I have no idea what they're doing, but that's what they say anyway. It drives the market. So we kind of listen, but we don't expect that to be the case. But nevertheless, let's take their word for it just this once, right? So you've got economists saying, hey, these 5 companies are going to report massively. Great, right? So what does that mean for indice markets? Really, really good. S&P 500, US 30, NASDAQ. A lot of these are tech companies also in the NASDAQ. So good for these indices, right? We've then got, something like NFP. We've got CB consumer confidence data. We've got all these other smaller fundamental data points that are all proving and pointing towards, in the CB consumer confidence case, right, pointing to the fact that consumers are more confident than they were in the past. The forecast 115 versus 110, right? Consumers are positive about the economy. This would drive the dollar. However, the big thing here, what is looming, is the fact we've got the Fed meeting on Wednesday, right? So if you forgot, Papa Powell is live on Wednesday, right? We're going to be covering that live. Now, the big thing right now, more than earnings reports, and I think will dwarf some of the earnings reports. We're going to see some big moves off this data, right? But I think what will dwarf it in time to come, that we'll look back and say, wow, that was a big move, would be what the Fed has got to say on Wednesday night. They've got a very, very tricky game to play, right? The Fed announced in December that it was a very dovish tone. For those of you who did this one live, in December, they said, hey, everything we're doing is working. The policies are in check. This is all good. We're seeing inflation start to come down. We're seeing all the right things. What happened, right? The markets took that and they ran with that, because as you guys know, and as I've taught in the past, we have a recession, right? Governments cut interest rates, quantitative easing, they inject money into the economy to stimulate it. Once the economy's been stimulated and they believe that there's been enough done to get the economy back on track, right, they start to raise interest rates, right, to stop inflation, right? So they start to raise interest rates. There's quantitative tightening instead of quantitative easing. So they sell all of these things that they bought, all this money that they printed, they basically put back into the economy. Instead of buying and stimulating it, they slow it down, right? So they raise interest rates, they slow it down, they try and bring down inflation. We are at that point now where that has been achieved and that is stalled, right? Inflation is believed to be ticking down, and interest rates will no longer continue hiking. They've been paused. At the December meeting, there was a basic consensus across the board that interest rates are now paused. Now investors are looking at, now remember, in that time, when interest rates get raised, markets take a knock, right? The dollar gets stimulated, everybody loves the dollar, and indices, Wall Street markets take a knock. That's why 2022, we saw the worst year in markets overall, right? Absolute slump in markets because interest rates were being raised during that period. Now, where we are now, where interest rates are paused, the big thing investors are looking at is what is that forward guidance on when interest rates are going to be reduced? When is the first interest rate cuts we're going to be seeing? That's going to be the big tone for Wednesday evening, is interest rate cuts. When is that going to happen? And will that happen around May, June, or will it happen as soon as March? That is going to drive the markets. Now, the perfect storm I was alluding to a little bit earlier, where we have all these different components coming together. Imagine this for a second, right? We have a world in which these magnificent 5 of these 7 companies outperform as these analysts so-called predict, right? Causing a massive rally on markets. And then we get the Fed coming in and being dovish and continuing the theme that they had in December, saying everything that we wanted to see work is still working. We're happy, etc. Right? Provided they're not hawkish and aggressive and keeping one interest rate hike on the table, whatever the case may be. Provided these two things happen, we have a perfect storm where Wall Street will rally beyond anything we've seen in the past 5, 6, 8 years. Right? Listen to what I'm busy saying is that on a good month, right, or good year, right, S&P 500 does 40%. On a bad year, S&P 500 has done -8, -12, whatever the case may be. But on average, S&P 500 does about 30% a year. This year, I think we're going to see even as high as 60, 70%, just based on the conditions that we're seeing right now. Interest rate cuts are inevitable. It's going to happen this year. There's no doubt about that, right? Companies are starting to see better economic climates to move through. COVID and the pandemic and sort of everything that happened, right, forced companies to become more lean, more efficient. They culled all the excess fat, all the excess staff, whatever the case may be. All the excess on those companies was essentially shed in order to survive. Right now, we're in a new economic climate that is allowing these companies to thrive. We're going to see reports and earnings far beyond anything we could potentially see in the future. So we're in a very, very exciting times to be in the market, and I'm super excited to be here. I think we're going to see stuff we've just never seen in our lives before, at least not in the last 5 to 8 years in the markets. Without further ado, let's look at some of the markets before I just carry on talking about this stuff, because I just absolutely love it. But let's get into it, right? So I want to talk about gold quickly this morning. This is gold currently looking on a weekly time frame. You guys know the story, in terms of this, quadruple top that we've had, that temporary challenging of the price of gold, that challenging of that top start of December, and we ultimately fell a little bit down. I'm going to go into a 1 day, and I'm just going to get a little bit closer and closer as I reveal to you what's busy going on. Right, so as you can see, right, we made that rejection. We made a secondary attempt there, also rejected. But if you also have a look here, we're getting some sort of market formation here, right? So I want to see who's seeing it, and I want to just draw this a little bit out here. Now, provided, yes, we don't have, that initial piece there that we would need to be continued or considered a continuation pattern. But I don't know how many of you guys are seeing that right there, right? So that is a pennant that will generally form for a continuation, right? A pennant is generally a continuation pattern towards the top side. So just for those of you who've got the keen eye among you, I just wanted to point that out, right? But above that, I just want to point out we've made that push into that quadruple top, secondary push, failed the push. Now we're sitting at support, or we were sitting at support a little bit earlier on, right? Closer to around about the 25th, which was last week. So in terms of that, where are we now? Right, so I want to draw your attention to some of the price action we had yesterday, some of the reasons for some of the trades we had yesterday. So yesterday initially, right, we looked at a little bit of a sell, right? We looked at, selling into an area that we got a bit of a pushback. Now, the reason for that sell, the initial sell that we lost yesterday on gold, right? If you have a look at this market structure here, this is currently sitting on a 4-hour time frame. If you extrapolate this further down, right, where we looked at selling yesterday, we looked at selling at that 2028 mark, right? And I'll zoom in here really quickly. Right, so there's that 2028 mark where we issued the sell. I got in a little bit late, 2030, it pushed up a little bit, and then ultimately just pushed a little bit further higher up, to the point where we couldn't hold that particular trade, right? And unfortunately took us out of that trade. However, we issued a secondary position that obviously did make money very quickly, and that was great, right? And again, the reason for that is we have some price action here that you're going to be able to see a little bit clearer on a smaller time frame. So again, this is 4 hours. I'm going to drop down to an hour, and I'm hoping this will become quite clear on gold for you, right? So let's jump into it and let's just have a look a little bit closer. And I ignore some of the crazy lines here, but I just want to draw your attention to, on a 1 hour time frame, those wicks on the 19th at 3 o'clock, 23rd at 9, and the 24th at 3, right? Those wicks there, if you pull them across, you'll see we've got a perfect parallel channel here, right? This morning I was looking at this rising market structure, trying to suss it out. But what I realized is that markets are still respecting this diagonal and parallel channel. The interesting thing about where we are right now is the fact that we are basically retesting that level. We're showing a lot of strength. There's a lot of buyers right here in this level, right? And this is going to come down to basically two things in my personal opinion, right? First thing is, I believe gold is positioning itself for a Fed that is going to announce that, hey, listen, everything's still on track. Our December, statement, or, the temperament, underlying tone that they came out in December, that dovishness, I think the markets are hoping that that will continue, right? Again, we're seeing these super strong Wall Street earnings reports, right? This drives the dollar down a little bit because Wall Street is inversely correlated to the dollar. But more than that, I think gold is pricing in a dovish Fed. Now, we might not see that today, right? Again, between today and tomorrow evening, we've got at least 30 odd hours between that. And so we can see quite a bit happen here. We could very well see a rejection here, and there will be opportunity for us to catch this as we see this rising market structure. We can draw this out. We might be able to catch a rejection here. Inversely, should market strength really continue here, we might try to catch a pop through of that 88.2, considering that it's two things, right? On a zoomed out time frame, right, you have a look at this long-term bear markets, and I'm referring to this long-term bear structure we've seen all the way from the 22nd. If that long-term bear structure has indeed been broken, and we can kind of see that as a confirmation there, right, on that yesterday pullback. Those wicks are pulling back into this long-term bear structure, right? So the pullback and retest successfully of that breakout has happened. It broke out, retested, and now we've got this secondary structure. So we've got two bear structures that price is now testing, right? If we make it past that $2,033 to an ounce, that will be a break of both of these bear structures, and a very clear sign that the bulls have got control here. This very well may rally well past that 2036, 2037 mark. However, it is just worth noting that our final point of departure here, our final point of resistance, will be that 2036, 2037 mark specifically. So if you're not interested in dabbling in a little bit of a range or these smaller scalps here, there's a much bigger swing trade that is cooking in the kitchen, and that's going to happen after we get some of that breakout. Now remember, right, you're part of the free environment and we're under 500 pips in the free environment, you will get this trade. But if you're not part of the free environment and we hit the 500 trades, 500 pips on the free environment, and then the swing comes out, you're going to be crying because it would have moved and you're just sitting there with your thumbs in the air. So I'm just saying, right, I'm not going to push Premium Plus this morning. I'm a little bit tired for that. I care about the markets more than whether you are on a subscription, but I do care that you are part of some of these trades, right? And for $30 a month, it's an absolute joke. There's nothing else like this. There's nobody in the markets that's going to tell you why something's going to happen before it happens, then tell you how it happens, and then help you manage that trade into profitability, right? It just doesn't happen. Speaking about profitability, in terms of yesterday, there's our current trade summary for yesterday. So just giving you an example, if you're part of Premium Plus, right? We issued a German 30 sell yesterday morning that hit 620 pips. Yesterday afternoon, we issued a NASDAQ buy, which did about 400 pips, right? So those two were the big profitable ones, right? Those were about 1,000 pips. We unfortunately took that bath on gold. That one position was negative 246 pips. That was unfortunate. So if you're part of the free group, right, you might be sitting at kind of a negative right now. But if you're part of Premium Plus, you should be up around about 909 pips as of this morning, excluding the 40 pips we currently have running on CAD JPY. So just in terms of that, if you're part of Premium Plus, the proof is in the pudding. We keep the transparency, the reports, the data is there, every single trade that we have to make sure that you guys can see exactly what's going on, right? In addition to that, if you want to be part of Premium Plus, you want to be part of the Fed interest rate announcement trading session, there's going to be a ton discussed there. We're going to break it down in massive detail. You need to have a TDM live account. Link is down below, as well as in the community area, right? You need to have that funded. You need to be a part of Premium Plus, right? Those are the two mandatory requirements, right? Having a look at German 30, right? There's currently a daily time frame. We spoke about this a little bit earlier when we were talking about the general state. I think it was last week, the general states of indices. I just want to show you guys where German 30 is right now, right? Very exciting times. Again, this is a one-day time frame. We can clearly see German 30 is in clear breakout structure, breakout territory, right? Getting a little bit closer, right? I just want to show you guys, end of November, well, start of November, specifically beginning December. We obviously had that massive bull run in the markets. Everybody was predicting a bad month in the markets. I was the one saying, I think we're going to see some massive things in December. We did. Start of January was a little bit shaky. But I just want to point out to where we are now currently on German 30. And the theme is going to continue across the board, right? So first things first, I just want to point out that we obviously have the ceiling that we hit on the 14th, kind of on the 2nd, and now basically once again, the early hours this morning, 1 a.m. this morning, right? That being said, that ceiling has happened. We've got some earnings reports. We've got the Fed coming out. German 30 also has a correlation to Wall Street, right? A lot of their investments and companies are interlinked and diversified into S&P 500, US 30, as well as the NASDAQ. So these tend to move together. Indices generally tend to follow each other, with the exception of something like the UK 100, right? Now, as we move into the 30-minute time frame, I just want to show you how many opportunities are available to you as a trader, right? And I'll speak about what this current price action is doing in a second, but I just want to show you guys something, right? Now, as a trader, there is multiple market formations available to you, right? If something's trending to the top side, it breaks structure, it generally will reject and move to the downside, right? So any one of these structures that you're looking at here, right? And I'll zoom in. I was doing this on a much bigger screen earlier. Any one of these structures. Now, I've obviously isolated this morning's, last night's, or the yesterday afternoon's move. I just want to show you what the US German 30 is currently done. Is we've pushed up into that area that we've rejected upon, and I've shown you guys a little bit earlier, and we now moved out of that range. We're now a little bit sideways, right? Now, the key areas that we're going to be monitoring as a team is two things, right? We're going to be monitoring, having a look at that 16993 mark. Now, the 17,000 flat mark for German 30 is obviously a psychological level. So this whole level is something worth noting. But again, we obviously want to make sure, about that breakout point. It's going to be 1710, 1720. But no matter where you look in this market, right, you're going to find breakout zones for trading, right? Anytime something trends in a particular direction, it can and will break out. So primarily when something's in a bear market, little structure, 5 minutes, 1 minute, 15 minutes, as soon as that breaks, it generally will start to move in the opposite direction, provided it does not range. Okay, so there's tons of scalping opportunities across the board for you. Most notably on German 30, we have gone a little bit sideways outside of this bull market structure. Now that we've gone sideways, the key important area here is, are we going to break further to the top side? Is the German 30 going to make an early pounce on potential US market earnings, or will it be delayed? That's going to be the very big question. Now, US 30, right, has absolutely shot through the roof, right? If we have a look at a little bit of a smaller time frame, maybe 15 minutes, right, there was yesterday's movement, right? Mostly due to earnings, mostly due to excitement in the market right now. There's just a lot happening. There's a lot of buzz in the market, right? What I would be looking for as a trader is, I'm looking at some of these highs. I'm looking at some of this market structure. There's some noise there that's going to kind of hold out this market a little bit. But I'm looking at that right there, right? That market formation, as you guys know, is also a little bit of a pennant type formation. The only thing is, I would have liked to have seen this. I would have liked to have seen that break happen, and I would have liked to have seen some continuations immediately to the top side. We didn't get that, right? So a little bit of break, and now this market's a little bit sideways. But you'll see that US 30 is giving a little bit of a hint away here, and this will be on a smaller time frame. And I'm just looking, and I'm just talking about that right there, right? So let's zoom in and let's see if it's going to give us any data. Okay, there we go. So again, anytime there's some big earnings, anytime there's some other data that's happening in the market, you want to be a little bit cautious, but you can see this data is moving through the markets and trending, and it looks like random, looks like just tick data, scattered tick data, because of the time, early hours of the morning. There's not a lot of liquidity here, specifically after such a big move. But this will serve as a really good early warning to a potential trade, right? So if you're trading, looking at US30 and you want to catch some of this bull activity, I'm primarily interested in some of the bull activity. I'd be looking for buys outside of this breakout zone, right? So 38,338 is where I'd look for some buy opportunities. Wouldn't necessarily be looking for sells right now, again, just because of how much hype is in the markets with regards to some of these big tech names, these big stock names that are still due to be released, right? So this evening, I think there's going to be a ton more movements. There's going to be a ton of opportunities. I would like to try and get into some bull trades, specifically on either US 100, NASDAQ, S&P 500. It doesn't matter which one of them. Obviously, I'm going to look for which one has got the best possible price action. But I'd love to get us into some buys on those trades, right? So we're going to look for price action. We'll look for breakout. That's going to be a premium plus only. Remember, we only send indice trades to premium plus. But I would like to get us into a profitable buy position with stop losses locked in to profit. Now, remember, a lot of the markets, a lot of the big money is anticipating these moves. So to just buy now is not that wise. You might see a bit of a sell-off. You might see a bit of a correction. So we're going to wait for that perfect market structure to present itself so that we can get into a position. Hopefully by the time the earnings come out, we already have our stop losses in profit. We can sit back, listen to the earnings calls and relax. That's the goal. That's what we're trying to get at. This week is going to be massive. There's going to be so much information happening. There's going to be so many things busy going on. As always, the team is working extremely hard to make sure the signals are going to be absolute fire delivered directly to you guys. Now, I do notice we have not been attaching some of the price charts, right, some of the market structures to some of the trades. Now, this will start to become a premium plus feature in the sense that we will attach the prices to the charts, in the sense that you'll be able to see some price action on the charts when we issue the trades. I know that fell off the map. The team has just taken that off their task list just to get things out a bit quicker, but I believe we're at the pace now. We should be able to attach some of these charts, if not immediately, then sometimes after the fact, right? So for those who are part of Premium Plus that want to see why we're taking a trade, where the stop losses, where the TPs, visually on a chart perspective, that'll be on Premium Plus moving forward, and we will occasionally put that into our general free area as well. So this is a bit of a longer one. We've spent about half an hour together today. The camera timeout even happened. It overheated. I had to reboot that guy. But I trust this is giving you a better idea of where we are right now and what all is still to come. So there's going to be opportunities in indices, going to be opportunities in gold. There's a bunch of currency opportunities we're currently monitoring as well. And there's going to be a lot more coming out. So again, if you're part of Premium Plus, if you're part of with us, just in general, you're in the right place, you're home. Premium Plus is obviously that next step, take things to the next level. Outside of that, guys, you know the drill. As always, much love. And until I see you all a little bit later, goodbye.